Okay, here we go. I am live. Let's get my audio right. What a day. Thursday, May 22nd. I talk about Strife, going to talk about MSTR, do some analysis, and we're going to do it live. I've been thinking about a lot of things. My brain has been moving a million miles an hour, and yeah, I'm excited to be here and walk through some of this stuff. So, once again, fabulous presentation by the MSTR team today. And I'm super excited about the $2.1 billion ATM on Strife. 2 weeks ago, I called it. I had anticipated they were going to issue an ATM on Strife or file for an ATM on Strife because of what you can see on the screen right now. Triple ATM strategy to generate BTC torque. It was only a matter of time. They had a $21 billion ATM set up for Strike, and now they've got one for Strife. I think this is primarily a function of how they've performed over time, right? We've seen these go from priced significantly at a discount to the par value and increase pretty drastically very quickly. So there's significant demand. The market is starting to figure out what these are. And yeah, they're exciting. I think this is, I truly believe there will be a time in the future where the interest rate on Strife will be lower than the US government interest rate, or like a 30-year treasury. So I'm excited about that future, and I've got some math to kind of back it up. So let's jump into it. And some of this is going to be on the fly. I'm just kind of winging it here. I was just running around with my dogs in the backyard. So we are going to run through this. And the first thing I want to start with is kind of what's going on in the market here. I want to talk about investment grade, right? What is, let's see, let's go here. What is investment grade? What does investment grade mean? Investment grade means it's a piece of debt that has a very high confidence that the debt will be able to be repaid back at some point in time in the future. There are generally institutions like Moody's and Fitch and S&P that provide ratings on instruments, and those instruments will define whether or not something is investment grade. Now, the concept of investment grade is really pretty simple. It's like, is there a high likelihood that this company is going to be able to repay its debt based on its financial strength and its balance sheet, cash flows, et cetera, et cetera. For most companies, that analysis is honestly pretty complex because you have to make assumptions of future cash flows, demands for products, market demand, disruption, technology risk, all of these things. And with MSTR, you have to, the risks are pretty simple. It's volatility risk, it's capacity risk, it's collateralization risk, and the ability to manage your financial balance sheet forward into the future. So yeah, I think it's a bit different. It's foreign. I understand why some of the rating agencies, if they've approached them, which I think they have yet to rate some of these instruments because they are foreign, they are unique, they've never been issued before. Bitcoin-backed perpetual preferred stock never existed before. So we're in a unique market environment. So the thing that I want to start with is really like risk architecture. And thinking about, well, like what is risk, just as I kind of outlined there, you've got volatility risk. When thinking about what is the risk of holding a preferred stock instrument like Strike or Strife, the risk is the value of the Bitcoin goes below the value of the debt for an extended period of time. So the convertible debt itself has an expiration, so you've got to take those into consideration. But the perpetual preferred debt doesn't actually have an expiration. So the market will determine what the interest rate payable is relative to the risk. So in my mind, a lot of these companies that exist right now in the market, they can technically be considered investment grade. And let's just take a look at it. Let's take a look at what this looks like. So actually, hold on, where to go? Yeah, I guess we'll start right here. Yep. Okay. So over here on the left-hand side, this is the company tickers. Make sure I'm out of my. Over here on the left-hand side, this is the company tickers. And this is their market cap currently. This is the amount of Bitcoin that they have held on balance sheet. Here's the value of the Bitcoin. Here's the total liabilities that they have on the balance sheet. And here's the leverage ratio and the debt coverage ratio. And I think strategy is calling this effectively the BTC rating. They're calling it the BTC rating, which is effectively a credit rating for these types of instruments, the debt coverage ratio. Here, let me make this a little bit bigger so everybody can see it. Okay. Debt coverage ratio is important. So you'll see for a lot of these, hi puppies. You'll see for a lot of these companies, they've got high debt coverage ratios. Like for MSTR, you've got a debt coverage ratio of 6. For Galaxy, you got a debt coverage ratio of 20. For CleanSpark, you got a debt coverage ratio of 7. Metaplanet 35 and NXTT of 59. So that means they've relative to the assets that they have on the balance sheet, the liabilities are relatively small relative to the value of the assets that they hold on the balance sheet. Basically, the debt is incredibly over collateralized. They've got a lot of capacity to potentially issue more debt in this scenario. So I wanted to look at the impact and like, why is this important, right? Like, so MSTR and Sailor, they're the only company in the market. They're the only Bitcoin treasury company in the market right now that they're the only Bitcoin treasury company in the market right now that has a debt instrument like Strike or Strife that is investment grade quality. There are some other convertible debt in the market that I think you can consider as investment grade quality because it's more senior on the capital stack, et cetera, et cetera. But this is the only like true debt-like instrument that is available in the market to tackle this $300 trillion fixed income market and the $300+ trillion real estate market and offer alternatives to the market. So why is that important? And like thinking forward here, where does MSTR go? How do they continue to tackle this? How do they continue to grow? How do they continue to accrete Bitcoin into the future? What does that look like? And so I ran through a simulation analysis here on the top, this top section here. And I wanted to walk through managing a balance sheet into the future with the price of Bitcoin going up and what this looks like and how much Bitcoin could a company like MSTR and all of these other companies potentially add to their balance sheet while maintaining a strong financial position and reducing the risk on the or a investment grade position based on leverage ratio. So moving over to the right-hand side here, we're going to walk through this. So based on these companies' liabilities, right? So let's put this a little bit more into perspective here. So the price of Bitcoin for the assets to be worth less than the debt. So for MicroStrategy, for the assets to be worth less than the debt on the balance sheet, the price of Bitcoin would need to be $17,000. For Mara, it would be $56,000. For some of these other companies like ClearSpark, it's got to be $16,000. Metaplanet's $3,000. So you can start to, imagine and see the leverage on the balance sheet, right? You can visualize it here. And in the insurance world, if you didn't have much leverage, like some of these companies like Metaplanet or NXTT or even Galaxy, you would say that the company is being inefficient because they aren't maximizing their leverage on the balance sheet. And I think that's a similar scenario to what's potentially happening right here. And you've got ability to increase the leverage on the balance sheet via different debt instruments. You've got convertible bonds are one debt instrument that most of the market uses. Now you've got Strike and Strife, which MSTR are the only company in the market with a perpetual preferred stock that is effectively a fixed income alternative product for the market. So I wanted to run through what managing the balance sheet would look like into the future, into perpetuity, with Bitcoin price rising and Bitcoin price falling. So if MSTR, and I'm going to start with MSTR and we can walk through all the other companies just to put this into perspective. If MSTR were to maintain a 25% leverage assumption, they'd be able to raise about $6 billion, $5.9 billion of capacity. They've got $5.9 billion of capacity to issue debt to hit that 25% leverage ratio. Now, how much Bitcoin can you purchase with that additional capacity on your balance sheet? And for MicroStrategy, that would be about 46,000 Bitcoin. You could look at the rest of the companies here. It's 1,000 to 2,000. So MSTR is in a significantly greater position. They've got significantly more capacity on the balance sheet to leverage up to a safe leverage position on the balance sheet. In this assumption, I assume that MSTR, the price of Bitcoin that they had to buy, is 15% greater than the rest of the market because of the scale that they have to buy at. Again, just a base assumption, just so everybody didn't say, well, MSTR is going to pay more. They're always buying the top, yada, yada, whatever. So got to put that into perspective. And that assumption flows through to the rest of the spreadsheet that you see here. So at the end of this period, after they raise, let's say $6 billion, buy 46,000 Bitcoin, at the end of the period, they'd have 623,000 Bitcoin. And you could see how much Bitcoin the rest of the companies would have. Again, this is the top 10 Bitcoin companies, excluding Tesla and Coinbase and 21, because we don't have good data on those ones. And obviously Tesla and Coinbase aren't running a leveraged Bitcoin equity strategy yet. So moving forward, also I was told my data is wrong. HUT has 12,000, whatever. Here we go. We'll just update it. This is from a website. I just used a website. We'll put it at 12,000. Doesn't really change the data at all. So moving forward, you got this new Bitcoin held here, this new Bitcoin held number. So then I assumed, okay, what if the price of Bitcoin goes to 200,000? What is the value of the Bitcoin, and how does the portfolio, like how does your capacity expand, right? Because as the price of Bitcoin rises, the relative capacity for leverage that you can put on your balance sheet increases drastically. So if the price of Bitcoin rises to $200,000, the value of MSTR's Bitcoin, 623,000 Bitcoin, goes to $124 billion. Yet they would only have $16 billion of debt on the balance sheet, right? Because this is fiat debt. Fiat debt. So then you just update the same analysis that I just walked through, right? You've got a leverage ratio. What is the updated leverage ratio with the existing fiat liabilities that we just calculated? This is taking the existing liabilities plus the capacity to raise capital moving forward into the future. And the leverage ratios, as you'd suspect, decrease, right? Because the price of Bitcoin rose. The asset that you held on the balance sheet that you're holding this debt against was rising drastically. So running the same analysis again, you've got leverage ratios, debt coverage ratios, et cetera. And you can see, in the prior period that we just looked at, the capacity to raise capital for MSTR was $5 billion. And now the capacity to raise capital is $15 billion when the price of the Bitcoin is only increased by 90%. So the capacity to raise capital has increased 300%, while the price of the Bitcoin is only increased 90%. This thing is compounding, right? People don't really understand like the scale of how this can compound and the how impactful that is to the credit quality of the balance sheet and their ability to issue more of this debt into the future. The market is going to take forever to digest this stuff, and they have to figure out, what is the risk? How do I quantify the risk, et cetera, et cetera. Somebody just asked, when did MSTR get to 623? This is all hypothetical. These are just hypothetical calculations just to illustrate the scale of MSTR relative to some of these other top Bitcoin treasury companies and their ability to raise debt. So running through the analysis again, in this is, maintaining the same leverage assumption, 25%, you could go raise another $15 billion of debt and purchase 65,000 Bitcoin. And again, you look at the relativity here compared to some of these other companies, and it's just miles away, right? MSTR could buy 65,000 Bitcoin in this assumption. Again, these are all assumptions. And that's even with having to buy 15% higher than the rest of these companies. So you're buying Bitcoin at, what was that? $230,000 ish, where the other companies are buying at $200,000. So the new Bitcoin value in this circumstance is 688,000 Bitcoin relative to the rest of the companies down here. And moving forward, and again, these are just assumptions. Moving forward, the price of Bitcoin going to 300,000, right? Let's say it goes from 200, we're still in the bull market, and it goes up to 300. Okay. The price of Bitcoin goes up to 300. The value of the Bitcoin held on balance sheet, right? You've got 688,000 Bitcoin at $300,000. You're now holding $206 billion of Bitcoin. Right now, Strategy's market cap is 110 billion. Just to put that in perspective. And the fiat liabilities held on balance sheet would be $31 billion. So again, you've got 206 billion of assets, 31 billion of liabilities. Your leverage ratio, again, is dropping back down. All of this math makes sense, right? As the price of the assets go up and your liabilities are in fiat and they're fixed, they stay the same, right? Now, the debt coverage ratio, or the leverage ratio is 15, the debt coverage ratio is 6.6. So their capacity to raise additional capital from this point is $20 billion. You can now raise $20 billion. Again, the price of, let's see, is that right? I think that is right. Yeah, you can now raise $20 billion. Wow, it's crazy. So in this circumstance, with the price of $300,000, MSTR would be able to purchase 59,000 Bitcoin. So now at the end of this period, you're looking at potentially 748,000 Bitcoin held on balance sheet. So I made some assumptions moving forward into a bull case, right? And everybody's thinking about bull case on the horizon right here. And then there's potential bear scenario. We got to walk through the bear scenario. So the red indicating a bear market price action. So in this scenario, we're going from the price of Bitcoin going from $300,000 and MSTR having 748,000 Bitcoin and experiencing a 75% drawdown on Bitcoin. In that circumstance, you have a 75% drawdown on the Bitcoin. The value of the Bitcoin held on balance sheet goes down to $56 billion, while the liabilities held on balance sheet are $51 billion. So in this circumstance, MSTR is still able to pay the debt that they hold on their balance sheet. You've got a leverage ratio of 92% after a 75% drawdown. Again, this is making assumptions that they're linearly leveraging up like at the peak up to their 25% leverage ratio at a potential peak of $300,000. So again, this is an illustrative example of that you can manage a Bitcoin balance sheet here, experience a very significant drawdown. You could take on leverage, experience a very significant drawdown. And if you're managing your assets appropriately up front, you can have the ability to continue to pay out the debt into the future. So that security is what indicates investment grade, right? Like if you've got a significant debt coverage ratio throughout the entirety of the period, you can withstand significant market drawdown and be able to weather any potential storm, which is what happened to Strategy in 22. They had this debt that had a long horizon. At one point, the assets actually held on balance sheet were worth less than the debt held on balance sheet, but it was okay because the duration of the debt was significantly longer. So they were able to weather that storm into the future. And now the importance here is the existing debt for strategy isn't collateralized by the Bitcoin. It's collateralized by the corporate balance sheet. And this is different from some of the Bitcoin treasury companies that are coming to the scene right now. The perpetual preferred stock and the convertible bonds aren't collateralized by the Bitcoin. What does that mean? In the event of a liquidation or a bankruptcy, you get dollars. You get dollars in return, not Bitcoin in return. Like there's no claim on the Bitcoin, and there's not a period of time where if the price of Bitcoin goes to X, there's a liquidation. That just doesn't exist. I know that's what a lot of people in the market think exists, but that just doesn't. It just doesn't exist. And yeah. So what does that look like pulling it all together on a total horizon, right? So looking at this bottom chart here. So the starting period where we're at today, apparently some of these numbers are a little bit dated and wrong, but looking from the starting period to period 1, period 2, period 3, in this circumstance, assuming every company leveraged up their balance sheet to 25%, all the way through the bull market. Let's say the bull market peaks at 300,000 and you're just levered at 25% constant through that whole thing and buying Bitcoin with it the entire time. The Bitcoin gain across these companies would be in totality would be 199,000 Bitcoin based on this base assumption. And of that 199,000 gain, 86% of it would come from strategy, right? You're looking at strategy buying 172,000 Bitcoin relative to the 199,000 that the entire market in this example purchased. So again, I'm emphasizing trying to illustrate the sense of scale that strategy has. It is, there are light years ahead of anybody else in terms of size and scale. And I've been thinking about this a lot, particularly with some of these other companies and the frenzy that's happening in the market right now. The biggest risk for Bitcoin treasury companies at the moment, I think, just in terms of equity risk, is copycat risk. You have a potential problem. Maybe let's go into this. So this is the underlying data that got us to the investment grade analysis. So this is what website is this from? Actually, hold on real quick. Oh shoot. Nope, not going to do it. None of this is financial advice. I was going to play the video of Tim, but I don't have it loaded up here. None of this is financial advice. I probably should have said that at the beginning. I'm just doing some analysis, walking through some of this stuff. It's incredibly interesting to me, and I think some of these products are going to change the world. So, got to get that out there. Anyway, maybe I'll have Justin edit that into the very beginning as well. So, looking at this analysis here, we've got, this is all of the companies that hold Bitcoin. I've excluded or pulled some down at the bottom, like Tesla, Coinbase, Block 21, Mercado Libre, and some of these others where the data was just a little bit sketchy, a little bit poor. So what I wanted to do, maybe I'll zoom in, make this a little bit easier to see. What I wanted to do is look up maybe I'll shrink some of this too. I wanted to look at the premium over NAV as a dollar amount, and I wanted to see what the entire market was trading at in terms of premium to NAV. And then I wanted to split out that premium to NAV into different jurisdictions, because what's happening right now is you've got all of these different jurisdictions, all of these different countries popping up Bitcoin treasury companies that are leveraged Bitcoin equities that are, all over the place. So I wanted to see, right, if the premium was lopsided, if it's been moving around relative to like market caps in the market, which I think it has based on what we've seen recently with what's going on with Metaplanet. and some of the changes in the market. The capital is flexible, right? The capital has the ability. People in the U.S. have the ability to invest in the Japanese stock exchange, and that capital can kind of move around and is a bit fluid. So I wanted to look at the market, the entire market premium over NAV. And I've asked Radu to build this out, and I think he's going to build it out a bit. But I wanted to see effectively how much premium does the market provide for the entire market provide over all of these Bitcoin equities. And just down at the bottom here, you can see there's about $95 billion in premium if you just take the market cap less the value of the Bitcoin holdings. This doesn't take into consideration the debt. It would just be too much work, and I didn't want to do it before this. So it's just to keep it simple. So the entire market is providing $95 billion of premium over the Bitcoin holdings of these companies that you could see in all of these different jurisdictions over here on the left-hand side. Of that market premium, strategy makes up 48% of that market premium. So I'm starting to conceptualize like a MSTR market dominance concept here. And I think that can expand into the future. And then I wanted to look at each country. So I wanted to look at all the countries. I wanted to sum together the premium over NAV in every single one of these countries. I wanted to take the market cap in every single one of these countries and compare them. So this is sorted by market cap. And as you can see here in the US, there's 59 billion of premium over net asset value in the US, and there's 134 billion dollars of market cap relative to Bitcoin treasury companies. And so what you can see here is that the premium over NAV in the US makes up 63% of the total premium in the entire global market on these leveraged Bitcoin equities. Again, I'm making a bunch of assumptions because I had to exclude some companies that aren't solely leveraged Bitcoin equities. And while the US makes up 76% of the market cap. So kind of what that tells me is some premium has left the market to chase other locations, which I think we know, right? We've seen this happen just in the last couple of weeks. And so you've got Japan here was $16 billion of premium over NAV in the companies that operate in Japan, and a $17 billion market cap. So of the total premium in the global market, they represent 17%, and of the premium or of the total market cap, they represent 10%. So it seems like the relativities there are disproportionate. So why did I bring this up? I bring this up because it's the classic meme, right? You know, the hot chick walks past you, you're like, ooh, you know, check it out. I think one of the biggest risks for all of these Bitcoin treasury companies at the moment is copycat risk. And what I mean by copycat risk is a company in any other jurisdiction comes in and copies what you're doing and provides an alternative for the market to move to. And we saw this in the US, right? Companies started doing what Strategy was doing. First it was similar, and now it's, you know, a landslide of all of these other companies that have come in the door that are running a Bitcoin treasury strategy. So, and the market is figuring out how to value these companies, right? We're seeing these new metrics come into play: months over mNAV, months to cover mNAV, and, you know, torque adjusted mNAV, and you know, all of these torque adjusted yields and things like that. But I think that the primary thing that the market isn't appreciating is copycat risk. The concept of another company coming into the market with a small relative balance, Bitcoin balance, and aggressive strategy. And I think I just saw this recently with one of the I think it's the UK or the French company, Alex Lise. It might be Alt BG, or, you know, whatever company that is. They just had a 800% Bitcoin yield, and I think people are going to chase those things, where you have companies that are starting with a small base and going to a medium base, and that capital is going to come in, support it when it's small, and help it get a little bit bigger. And that capital is going to be moving all over the place, and it's going to be chasing the next hot rod. This is like I think kind of altcoiny, but it's all staying within Bitcoin. So how do you quantify copycat risk? The So in my mind, there's two things. One, what's the existing position of the company in that jurisdiction, and how many companies have as much cash as you do, or as many assets as you do, and have the ability to operate and run the same strategy that you do. And that, I think, is pretty important to take into consideration, because you look at a company like MSTR and you think about the US, right? They've got $60 billion of Bitcoin held on balance sheet. They've got 576,000 Bitcoin. You think about, okay, how much would it cost today to buy 576,000 Bitcoin? It's probably it's a multiple of what it's at, of what it is today, of what the Bitcoin price is today, especially in price discovery. It's probably, you know, maybe 100 billion, right? It might cost 100 billion to go out and buy 576,000 Bitcoin right now. So you start to think, all right, how many companies could theoretically do this? And there's only one company in the US market, in the world, that is in a capital position where they could potentially do it. And it's Berkshire Hathaway. I think the probability that Berkshire Hathaway does this is incredibly, it's like infinitesimally small, so close to zero, it's basically zero, because that is not what Berkshire Hathaway does. Berkshire Hathaway buys value companies. And I think that there would be a significant exit from the stock, and the stock would see a significant price decrease if they did buy Bitcoin, because all of the boomers would run for the hills. So I think that the probability to do that is incredibly small. It's just so much capital to move on one single consolidated bet. I think it's a very low probability. And now you look at some of the other companies in different jurisdictions, and they are doing great, right? They're doing fantastic. They've been incredibly successful in all these other jurisdictions. And it's so exciting to see. Like, it's so fun to watch. And I've got pieces of all of them, right? Like, I'm having so much fun watching all these guys succeed, and have a ton of success here. However, I'm keeping my expectations very tempered, because I think there is risk of having too much exposure in any one of these entities, because of the copycat risk. And a company that comes in and competes with you for that number one spot, because they maybe are using the balance sheet a little bit more efficiently. Maybe somebody else in Japan comes out with preferred stock, Bitcoin-backed preferred stock, before somebody else does, or whatever that may be. And there's a lot of competition yet to be had in all of these other jurisdictions. It's going to be insane to watch. It's going to be totally insane to watch. In the US, it's very clear that MSTR is one. In the globe, right? In the globe, you look at just the holdings, right? It's pretty simple. Pretty clear that MSTR is one. And especially now that they have the instruments where they could go tackle these large capital pools like Strike and Strife. And as I walk through the investment grade analysis, they have just so much scale relative to these other companies. They can bring in so much more capital in the door from these other fixed income markets relative to any of these other companies. It's insane, right? It's like huge, massively different. We haven't even talked about S&P 500 yet. And I think that just accelerates this whole thing for strategy. But so all that to be said, I think the equity market right now is misquantifying risk. There's going to be a lot of competition in all of these jurisdictions. It's going to be so exciting to see, because I think the other equities in the rest of the world that aren't adopting a Bitcoin treasury strategy are going to see these Bitcoin companies have so much success, and and these other like value drain out of some of these other companies that they have to adopt a Bitcoin treasury strategy, especially if you have companies that are going in and buying companies that are trading at a discount to cash and using that to smash buy Bitcoin. It's just, this thing is about to accelerate, I think, pretty drastically. And all of these companies, like there's not that much leverage in the system right here. Right. Let's go back to this. Let's think about total leverage. Actually, let's do the calculation right here, right? So and this is just the top 10 companies. Right. Okay. So just the top 11 companies ranked by Bitcoin holdings has 77 billion of Bitcoin and 14 billion of liabilities, just summing all of them together. So just these have a leverage ratio of 19% and a debt coverage ratio of 5. So the entire market, I mean, obviously strategy has a huge proportion of that, right? It's like 96% of that. There's not a ton of leverage in the system right now. So like, I think we're going like way, way, way higher than where we're at today, right? We're at $111,000 Bitcoin price. And we haven't, like, the leverage hasn't even come into the scene yet. And if the price of the Bitcoin continues to rise, the strength of all these balance sheets improves just drastically. Like they become investment grade and better, right? In my opinion, the Strife product, in my opinion, not financial advice, in my opinion, the Strife product is better than holding a US Treasury, and it's perpetual. And I don't think the market has really quite figured that out yet. And so what else do I want to talk about? I wanted to talk about, where's it at? S&P 500. Because I think it's pretty important. Like people don't get how big this thing is. Which, I mean, strategy, this is going to be the biggest company in the world, like by far. Like this is going to be huge. And not just like barely the biggest company in the world. It's not just going to go to like 3 trillion and just be like number one by a couple $100 million. It might be a whole order of magnitude larger than the existing largest companies in the market, because nobody else can catch this company, and their financial strength is unlike anybody else. And if you think about, some of the most powerful financial companies right now are like the Mag 7. In order for them to fully adopt a Bitcoin treasury strategy, I bet they're not going to do it until the price of Bitcoin is over $1 million. Right? So if you think about that, the relative value of these companies relative to strategy is going to be way, way, way lower, way different. So this is what I'm talking. This is moat, right? This is significant moat. It's just enormous moat. So in thinking about like the S&P 500, why is this important? Because this is just more passive dollars that come in the door to buy MSTR at any price, right? These are zombies. This is 401ks. This is pension funds. This is any company that follows what the S&P 500 does has to buy these stocks. And I don't know exactly how this works, right? I don't know how much of it is front run. Everybody's front running everybody all the time. In my opinion, I don't think the market knows this is happening. I think they're completely blind. I think the market is pretty blind to what's going on. Just understanding what's happening with MetaPlanet, what's happening with Jim Chanos, what's happening with short interest across the market. People are bewildered, right? Like the lady at the Financial Times is long teeth. Like people just don't know what's going on. And I truly believe that it's definitely not priced in now, and I don't think it will start to be like really priced in until the end of June. And we know the price of Bitcoin at the end of June, which is the trigger, in my opinion, for a monster earnings period, which is going to, like ripple through the market and it will be the biggest news. I think this is the biggest story of 2025, right? What's going on with MetaPlanet? Huge story, really big, amazing, so fun. Like, I love watching Dylan and those guys just absolutely crush it. And what's going on over there is crazy. But this is the bigger story. This is the magnet. This is the behemoth story. Does MSTR get included in the S&P 500 if the price of Bitcoin is, or do they get included in the S&P 500? Because the earnings that they are going to get if the price of Bitcoin is at and above where it's at today is going to be absolutely monstrous. So actually, let's start with the earnings estimate. Let's just play around with it just to get everybody balled up, and then we'll go from there. Right. Okay. The Bitcoin price today is $111,000. Right. Every time. Okay. So how many days? We're probably about 50 days from the end of the quarter. Last time Bitcoin went into price discovery in November, the price of Bitcoin moved 50% in 50 days. So let's do this. Let's just crank this up. Let's just say the price discovery is the exact same. And let's say it goes up 50% from here. Let's say it goes up 50% from here to the end of June. Again, this is all illustrative just to get everybody bulled up, and we'll just see what this potentially looks like. So the Bitcoin price held at close is 82,000. They held 528,000 Bitcoin at close. So the gain on the Bitcoin held from Q1 would be $43 billion. Holy shit. Getting everybody pulled up. 43 billion. The Bitcoin accumulated in Q2 so far is 48,000. The average cost of that Bitcoin accumulated in Q2 is 94,000. So the gain on the new Bitcoin held, or the new Bitcoin bought in Q2, would be 3.3 billion. Now the likelihood that they buy more Bitcoin is really high. And I think they may add some leverage at some point here in the next couple of weeks or month or so. So this number could be, significantly larger. So if we end June at $165,000, assuming the amount of Bitcoin held on balance sheet doesn't change at all, the total gain in Q2, the net income, well, they got to take into consideration tax and all these other things, but just the Bitcoin net income itself would be $46 billion. That's a lot. That's a huge number. This is an enormous number. That would be the single largest quarterly earnings for a company ever in history of financial markets ever. Just to put that into perspective, this company is ranked 86th out of the all US companies in the world, and they have the potential to post the largest single quarter earnings ever in 2025 with everybody being early to Bitcoin. Oh my God. So right, shares outstanding 276 million. This would be $169 EPS in Q2. Last 4 quarters, they had a $5 billion loss. So they cleared the hurdle of having positive earnings by $41 billion, which would be 90 times MSTR's net income from 2009 to 2020, which is awesome. That would be incredible to see. I mean, just kudos to Saylor and team. I mean, that would be full circle. So if you think about PE ratio, right? If this stock were traded like the rest of the companies in the market, you're looking at what, just on a gain. Obviously, again, taxes aren't taken into consideration. That's like deferred tax liability would knock these numbers down. So this is like mega bull math. But the S&P 500 average PE ratio is 26. QQQ average PE ratio is 35. Mag 7 is 31. So if you're to hold those ratios constant, and these are averages, right? Many companies trade significantly higher PE ratios than this. You're looking at a potential price between $4,500 and $5,300, just if you hold PE ratio constant. We're not going to know exactly what the earnings number is. So we'll know when the quarter ends, June 30th. We'll know what the price of Bitcoin will be, but we won't know what the earnings figure will be until, I don't know, like August 5th or something. I'm sure all of those guys are going to be just incredibly giddy if the price of Bitcoin is this high. Um, and at that point, it's going to be the same scenario that we saw. I'm super excited for this day. It's going to be the same scenario that we saw this last month, where the earnings estimate by analysts in the market will be like 55 cents. And the analysts are going to miss by $46 billion, right? Or, they're going to miss by, let's look at that. The percentage miss, it could be insane. 300, the percentage miss could be 30,000%. Which is possible. I think there's a very high likelihood that we see that happen. It's going to be fun to watch. And yeah, I just don't think the market knows what's going on at large in any circumstance. I mean, we just hit Bitcoin all-time highs. Twitter's relatively quiet. The X is relatively quiet. I've got nobody's reached out to me. Nobody's texted me about Bitcoin hitting all-time highs aside from my friends in the True North group. And nobody knows this is happening, and we're entering spring, right? Everybody's out kind of doing things. Weather's starting to get nice, and people are out and about living their lives. Meanwhile, like the biggest story in all of finance is happening underneath their feet. Pretty wild. Okay, so let's look at the S&P 500 potential flows, and let's just walk through this, because I think this is a valuable concept to try to think through. Understanding that if there is significant passive flows from the S&P 500 that come in the door, there's going to be very limited shares that they're going to be able to buy, because I myself, I'm not selling to passive flows that are coming in the door, because I want to hold this for 15 years until strategy debt is the yield on Strife is lower than the 30-year treasury. Like that might take a while. It might take 12 years, but that's how long I'm holding this for. That long. I want to see this company grow into the behemoth that it's going to be, and I want to be a part of it, right? I'm not going to sell my Apple stock in 2002 for a 200% gain. I want to hold this for ever, because I feel like I have asymmetric information here, right? This is the market. The potential here is so lopsided. It's just so absolutely lopsided. And so when thinking about S&P 500, the last qualifying component that they need to get included is earnings, positive earnings. As we just walked through, I think it's very likely that number is a blowout number. Some number so large that it's going to be a shock. When you read the newspaper, or people don't read newspapers anymore, but it's going to be all over the news. It'll be a huge ordeal. And at that point, thinking about the last thing in order to get included in the S&P 500, strategy needs to pass a committee vote. So the committee will have to figure out, do we let a Bitcoin treasury company that also has a AI business into the S&P 500? At that point, I think the company will probably be around, I don't know, 50 or 60th highest ranked publicly traded company. And I think it'll be a really difficult decision to exclude them, right? If they just posted, one of the largest single earnings in a single quarter by a company ever, and then they decline them in the S&P 500, I think it would be pretty difficult to have a reason as to why they did that, aside from volatility, obviously. But strategy did add $12.7 billion to their retained earnings from 2024. So thinking of volatility, you're now looking at, years of continued gain. I mean, this was a $1 billion company with $500 million of assets 5 years ago. And now it's a $100 billion company with $64 billion of assets 5 years later. It doesn't matter if it's volatile. That's like the amount of assets it's so big. This is the strongest financial company the world will ever see. Uh, yeah, so I think it'll be pretty difficult for them to exclude them. And so somebody says Judgment Day here is June 6th. No, strategy won't be considered for the S&P 500 in June. They'll be considered probably for the September inclusion. And I think the September inclusion date is September 19th. I think the earnings will be August 5th. So they'll have to post the earnings. It'll have to be positive, right? The price of Bitcoin needs to cooperate. And then the potential inclusion would be in September. If they don't get included in September, it would be included in December. Again, the fact that they get included is that's not what people should trade here. No, this is financial advice. Everybody's front running everybody all the time. So again, all of the data and analysis that we're walking through right now is what the rest of the market is potentially trading on. But I think a lot of people are not paying attention to this story. So if you have this information, you front run the rest of the market. So the fact, like the announcement of them getting included in the S&P 500 is not the important part. It's qualifying. Qualifying for the S&P 500 is the important part. And you can go back and look at other instances of when companies qualified for these indices, and that's when the front running begins at qualification, not the inclusion date. In fact, if you go look at inclusion date, 97% of the stocks after inclusion date underperform, and the reason being is because the opportunity cost of capital is much higher somewhere else, aka you want to go find the next company that's about to rise and get included in the S&P 500 and front run the rest of passive retail investors for the rest of time, like into perpetuity. Whereas in this scenario, you have no incentive to sell to any of the passive buyers because like this is going to be the behemoth of the world in 10 years. Like, why would you sell? All the sophisticated capital that's bullish on MSTR is going to sit in this thing for a decade and not flinch. And it's going to be volatile. Like, we're going to see this thing oscillate. It's going to oscillate just drastically. Like the November blow off top, we might see something very similar. And it, might go to 4,000 and back to like 1,000. At that time, there'll probably be another stock split, and they're going to add more Bitcoin along the way. And it might look rinse and repeat of what we've seen over the last 6 to 9 months. And now they have all these instruments and all these tools to be able to capitalize on all of the market frenzy and market craziness. So to all the people that are concerned about just like the last couple of days price action on MSTR relative to Bitcoin, are completely missing the forest from the trees here. Like, they have all of these tools prepared in preparation for some of the craziest market environment of all time, and they're going to have the ability to capture all of that excess liquidity as opposed to like watching it come in the door and then watching it go out the door. They're going to watch it come in the door and then capture it and add it to permanent capital on balance sheet, which increases the credit quality of the company, so they can go issue more debt and walk this thing around the market and say, hey, like, this is the best financial instrument on the planet. You should buy more of it. It's the safest financial instrument on the planet. You should buy more of it. And then it's like rinse and repeat that cycle until, we're in a Bitcoin denominated future. Like Strike and Strife are the vehicles by which we enter a Bitcoin denominated world, right? Like, this is how the capital comes in the door. Like, it comes in from traditional finance buying these instruments to save their asses, and strategy then takes all of that capital that comes in from Strife. They go buy Bitcoin with it, and there's zero dilution on the MSTR shareholders. Well, the dilution would be, selling ATM in order to pay the dividend, but it would be at a point in time in the future, and there's no upfront dilution like there is with a convertible bond, right? You issue a convertible bond, you get 70% of your stock is sold short day of that you issue it. So it's like, okay, you get basically 70% dilution right away when you go issue a convertible bond. And that doesn't exist with these new preferred instruments. And that's why they're leaning into these. That's why they're such a big deal. That's why we're talking about them a lot, is because they're significantly more accretive to the strategy balance sheet uh, than these other instruments. So let's look here. I also wanted to do. Oh, this is the S&P 500 capital flowing following QQQ. Okay, so QQQ, the strategy was included in the QQQ last November. So the amount of capital that followed QQQ is about $500 billion. $500 billion of capital following QQQ. The amount of capital following S&P 500 is about $5 trillion, which is 10x the amount of capital following QQQ. There are 100 companies in QQQ. There are 500 companies in S&P 500. And when strategy was added to QQQ, they had an allocation of about 35 basis points, which resulted in a rough capital flow or capital allocation of $1.75 billion of dollars that are coming in the door. During that time period, strategy raised $17 billion from 11/11 to 12/16. So this is basically the front running. In my opinion, I think this is a confluence of factors. Obviously, the election, retail strength coming in the door, but I think a majority of it was front running QQQ. So because they had the ATM, they were able to capture that value that was coming in the door to the tune of roughly 10x the multiple of the indicated capital that would come in the door from QQQ. So you look at S&P 500 and an allocation of 40 basis points, which would be roughly where they're at today, right? I don't know, something about that would be top. Yeah, let's look at this. Let's go point. Let's go with lawnmowers. Let's assume it's 25 basis points around lows at the 75th ranking, which is about 26 basis points. In that circumstance, there would be about $13 billion of capital coming in the door potentially to buy MSTR. And that is, what is that? 7 times the amount of capital that came in the door for QQQ. 7.5 times. And so maybe some of that capital is already here, right? Maybe there is some front running happening in the market right now. Maybe that is the reason for some of the premium that's held on the balance sheet. Like, I don't think that's most of it, but maybe that is the case. But again, I think everybody in the market that's sophisticated has incentive to hold this forever, not to sell it. So again, you have very little incentive to sell to passive flows coming in the market here, because this is going to be the biggest company in the world, in my opinion. So let's assume it just has the same multiple on capital here as they raised here in QQQ, and they can raise about 10x the amount of capital if they just had the ATM available on the S&P 500 flows. So that would result in $130 billion coming in the door. Well, what's the information and data that we know? We know that there's about $18 billion of ATM left on the newly filed $21 billion capital plan that they just filed. Let's say by the time we get there, maybe it's all used up. Maybe they file another one. But let's say even if they tried to raise let's just say $45 billion, you still have net capital that you can't capture. Like, even if you had to refile for an ATM on all this money coming in the door, that takes like maybe a couple of days, and you got to get back out in the market, and then you start, selling more stock. And we're talking, significant a potential increase in market cap and ability to capture more Bitcoin to hold on the balance sheet permanently, and potential really significant price appreciation in a short amount of time, because there's so much Bitcoin held on balance sheet, and there's so much money coming in the door to buy the stock because they have to, and they have no other place to go. Like they literally have to buy the stock to match the index. That's why this is so nuts. So I think there's a lot of people coming for a very small number of shares that are actually liquid and actually trading in the market. Obviously, we see volatility day to day. I think there's a lot of things going on. Obviously, the ATM, we know that the ATM's on. They're continuing to raise capital because we're going on this meteoric rise. There's also convertible arb traders in the market, and they are trading the stock both directions. You've got, obviously, people are short drastically. You've got MSTY, IMST, all these income products are, $4 billion of short interest on the weekly. And so you've got significant pressure that's kind of like put this lid, like this, I think it's just like a short-term lid on MSTR until there's an overwhelming amount of capital coming in the door on the front side, there's an overwhelming amount of capital coming in the door that's over and above and much greater than the short capital that's in this trade. And you could experience a situation where anybody that is short on this trade outside of the convertible bond traders that are fully hedged out start to chase their tail, similar to what's happening in Metaplanet. But the scale here is like so much larger, right? Like we're talking $130 billion potentially, which is like even $13 billion of capital coming in the door. That's like 17 times the size of Metaplanet right now today. That's just capital coming in the door to potentially buy the stock. It's huge, right? You just look at the relative scale here, and like this could double. Like this MSTR, this size of like all of these things, this could double. What would that look like? That'd be crazy. Even if this doubled, which it probably wouldn't, because the architecture of the market is just way different. But even if this doubled, right? I mean, it looks very different. Yeah, the scale here is just people can't comprehend it because it's so big. They've never seen anything like it before, and it's hard to wrap your head around something so large. I think this is where it's going, but I mean, I could be wrong. I've got a lot of math. I've been sitting on this for a long time, and this is one of the reasons that I've been sitting in this trade for this exact moment, because I thought it was going to be. I think it's going to be crazy, especially if they're included at such a high valuation, and they have all of these tools now to capture that capital flow that's coming in the door, and then just buy Bitcoin with it. Now you've got this floor of permanent capital that's continuing to move forward into the future. And somebody's asking, where's the overwhelming capital come from? Overwhelming capital is coming from S&P 500. But I guess in terms of Strike and Strife, like where does all that new capital come from? The new capital comes from running around the market and making a risk market here, right? Like you got to go market this thing and sell this thing. So you got to explain it to people. And if there's a situation, let's just look at this. Actually, let's do this. This is fun. Okay, let's look at this. Let's hide this. Okay, let's hide this too. We'll just isolate this, make it look super clean. Okay. So how do you get capital to come in the door here? Okay. So let's focus on this pro forma here. Let's just say the price of Bitcoin does go to 165,000. And let's say the Bitcoin held on balance sheet goes to 600,000. Well, let's not even say 600,000. Let's just keep it the same as today. Bitcoin held 576,000. If the price of Bitcoin goes to 165,000, the company is going to hold $95 billion of assets on the balance sheet, and they've got $5 billion of debt and $1.7 billion of preferred stock. And that's on a pro forma basis, assuming all the debt that's currently in the money converts to equity. That would result in zero dilution because all the convertible bondholders are already hedged out. It would just be a closure of the existing $3 billion of debt held on balance sheet. So you're looking at, you got $6 billion of debt in total in this example, and $95 billion of assets. So you're looking at a Bitcoin price needed for the assets to be less than the liability is about $8,600. So you think about the credit quality here. You're talking like a 5% leverage ratio, a 19x debt coverage multiple. You're like, you would go to sovereign nations and you say, hey, do you want to buy $1 billion of my debt? I'm over collateralized by 19 times. And they say, excuse me, what? You're over collateralized by 19 times? That doesn't exist in the market, right? Like you look at the rest of the market. The rest of the market has leverage ratios of 80%, 60%, 50%, and they're all dependent. They're all dependent on the cash flow of their company. And like this is the evolution of a digital capital company that's got a really strong balance sheet, and their company is a function of their strength of the balance sheet, not the income statement. And this is the big aha in the market right now, is like there's been no innovation on the balance sheet of companies for the past hundreds of years, and they've all been really hyper laser focused on the income statement, and now that's totally shifted. It's like now you can innovate on your balance sheet. Strategies proved it. And you look at the credit quality in this scenario, even at the price it is today, right? I mean, Bitcoin's not going to $8,000, right? I mean, it's just not happening. Zero, in my opinion, is off the table. So I think the capital will come in, and it's pretty clear that it's already started coming in. We're just seeing the volume of Strike over the past couple of weeks, and they're using the ATM on Strike. They've been continuing to raise capital. I think they raised $50 million. There was $50 million on Strike last week. A lot of people scoff at that because they raised $1 billion, or I don't know, 700 million on the ATM. $50 million is a lot of money. Right? That's a like, not everybody can just go out to the market and raise $50 million in a week, and they have the ability to scale that up drastically. That's a lot of money. It's a lot of energy. Yeah. So I'm pretty bullish here. Hard not to be. I'm bullish on everything in the market, honestly. Like all of these Bitcoin treasury companies, I think they're gonna do well. But just be careful of copycat risk, right? If anything gets overheated, right, there's always the next hot broad in the market, and I think we're going to see a lot of those over the next year, 2 years. We're going to see a lot of companies that are doing exciting stuff that people want to be a part of. So yeah, all right. I think that's pretty much it. 8,000 people tuned in and got an hour and 10 minutes in. It's pretty wild. I can't believe like I'm talking about this stuff on Thursday night, but my brain can't stop, and it's kind of where I'm at. I think the market is massively underestimating the size and the scale of strategy, and the fact that there are no competitors. There's nobody that can compete with this moat. And the only way, um, the only way anybody could even potentially think about competing is you have to offer a debt-like instrument to siphon, the fixed income market or the real estate market capital in the door. And strategies is the more powerful one at the moment. Not to say that, these other companies may not have better, credit quality at certain points in time in the future, but MSTR is the investment grade Bitcoin debt instrument at the moment. And I think that will continue into the future. It'll be pretty hard to compete with that, right? If strategy pulls, even if they pull in 2.1 billion of Strife, I mean, we're off to the races, man. I mean, this thing is going to keep on going because the relative torque on the balance sheet, right? You just have very little dilution on MSTR, and you're able to buy Bitcoin today and pay out this fiat liability into the future. I mean, this thing is just so crazy. I can't believe this is happening. Anyway, all right, that's all I got. Thanks for hanging out, and appreciate the time. And we'll keep cranking some analysis. I'm going to take tomorrow off and just try to have a breather. I'll see people at Vegas if you're going to be at Vegas. And yeah, I think we're going higher. Catch you later.